Now, often when we talk about Africa, we use some of its worst stats. So we speak about the world's poorest continent. We also speak about perhaps the least developed continent in the world and some of the poorest countries on earth. But I think we all know that over the last few years, that narrative has been changing. I mean, we've begun talking about 7 of the 10 fastest growing economies in the world being African. People have also started talking about Africa's demographic boom as a dividend that potentially will transform us in the future. And so here we are today, where we are celebrating perhaps what would have been for the original leaders of this continent, the second part of their effort to try to liberate the continent, the economic leg of that discussion. So our discussion today is the culmination of a journey, as we have heard, that began 7 years ago to try to include as many Africans as possible inside financial services and inside the economies where they are in Africa. And at the end of the day, I want us to be able to map the journey that has been traveled so far and where we are, and important and crucially, where we are going and how we are going to go there. Let me introduce my panelists who are going to help us do this. On my extreme left, I've got Keith Davis, who's Chief Financial Officer from Zuna. Next to him is Martin Holtman. He is Manager, Digital Finance and Microfinance at the International Finance Corporation. Let me also welcome Ann Miles, Director, Thought Leadership and Innovation at the MasterCard Foundation. Next to her is George Nyashanu, Managing Director, Econet Insurance. And very next to me here is Marim Sene, Head of Project Management at Baobab. Thank you all for coming and welcome. I want to start perhaps with you, Anne, in terms of the journey traveled so far. And what I'd like to hear from you is a picture, and I'd like some numbers, thank you very much, of what you have done, what you have been able to achieve before we go on and talk about where we want to go.
The MasterCard Foundation has been working in Africa really since 2008. We're a relatively young foundation, having been established by the MasterCard company in 2006 when they went public. And the foundation began programming in 2008. In the last decade, we have committed over $2 billion comprehensively across 3 areas of work: education, youth, livelihoods, and financial inclusion. This has extended beyond Africa to other countries as well, but probably more than 80% of our commitments have been in Africa. The Partnership for Financial Inclusion, which we have with the IFC, and for which we are here today for this event, is probably one of the largest partnerships we've had within our financial inclusion portfolio at approximately between $37 and $38 million. And I think the success of this program speaks to the outreach we've achieved with clients in terms of 11.4 million total clients, which is also a very large percentage of the total outreach of the foundation, which is just above 30 million now across all of our programming over the past decade. So this partnership that we have with the IFC that we're celebrating here today and tomorrow in Dar es Salaam really represents a significant part of that outreach that's been achieved on behalf of the foundation. And just finally, in this year, in 2018, the foundation announced a new strategy which will take us forward to 2030 called Young Africa Works. So in this new strategy, we will combine and leverage the work that we've done across education, financial inclusion, and our work with young people in terms of youth livelihoods in service to Young Africa Works, seeking more employment and entrepreneurship opportunities for young people in Africa where we know that probably more than 60% now of the population here is under the age of 35. So we see this as a tremendous opportunity for the foundation and for many others to work with us over the next 12 years. And financial inclusion will continue to be a critical leverage point in terms of that new strategy.
Martin, if I can come to you, because you were the implementers of the project. Let's talk about some of the issues that you saw along the way, some of the key lessons that were learned along the way.
So I just want to resonate the leapfrogging that Africa has engaged in and has shown to the rest of the world, coming from what was probably the lowest rate of financial access, not just inclusion, but even access, just being able to access the formal system, to now being one of the leaders in the developing world. And we had invested as IFC, which is the private sector arm of the World Bank, in private sector operators in the access to finance space. In fact, by now we've done about $6 billion of investments over many, many years with traditional players. When this partnership started, we assumed that it was going to be those traditional players that would get a boost from this partnership and that would learn to reduce their costs, to reach more rural customers who have traditionally been
When you say
excluded.
traditional players, you're talking about the banks?
I'm talking about banks, and I'm talking about formal microfinance institutions. In fact, over the years, we have helped to create 20 such microfinance institutions in African markets where they didn't exist before. One of the big surprises of this program was that while these organizations also, on average, have done much better with digitization and reduced their costs, it has been non-traditional players that have really made the biggest difference in terms of access to finance. Mobile network operators, cell phone companies, and also service providers. We have actually one sitting here right next to me.
Yeah.
And that has been, I think, the biggest lesson, that there is a newly evolving digital ecosystem where new partnerships enable the existing players to do better, and where new players are coming in that we hadn't even thought of before.
And how difficult was it to find these people? Or did you find the systems and the regulation easy to navigate and able to bring up these new, I think we're going to celebrate them and call them diamonds, but in the past we know they've been called rebels, but they are good disruptors, right?
That's true. I think it's been a combination of both. There are some tech hubs in Africa. There's one very close by here in Nairobi, but Tanzania, by the way, also has a lot of new age tech firms. I think the partnership has created a venue where this kind of market has been created. I remember in earlier programs there were these marketplaces where some of the new fintech companies would approach existing players and vice versa. And I really see that as one of the biggest benefits of this program, that it has put a lot of information into the public space where people were able to find each other. Now, on your question specifically on regulation, I would actually say African regulators on average, maybe there are exceptions, but on average actually have been surprisingly accommodating to enable these new ecosystems to develop. The M-Pesa's success in Kenya would not have been possible in Europe. The European regulators would not have allowed anything like M-Pesa to come up, and I think that's just one small example of how well the regulators here have enabled the new digital financial economy to grow and to prosper.
Indeed. Let's come to the practitioners, the service providers themselves who have been a part of this. Mariam, if I can come to you. From where you sit and from the kind of interactions that you have had, the kind of experience that you have had, please share with us some of the key moments and some of the key challenges that you encountered along the way.
Okay. Hi, everybody. Happy to be here. It's been like, I was here sitting in 2015 in Johannesburg, sharing experience of Baobab, and we were just starting the journey of digital finance. So just a quick background of microcredit that now is Baobab. So we are typically a traditional microfinance institution, and we've been through the whole journey of digital finance. So now we are operating in 10 African countries, and we're present also in China. So the focus here is about not being only micro credit focused, but to move to the next level to be able to serve more clients with simple tools and simple services. And this was enabled with the technology, with the digital, so this is where we take this journey. So along the way, we faced some challenges, big challenges. Regulation was part of it in some of the markets we were serving. But not only you have the change management, because change is really critical here. The disruption already happened. So either we took the train or we just see people moving forward. You have new competition, new fintech being player in the market, so we really needed to take the train and move forward. So that's what we did, going into the digital journey.
What kind of challenges did you have with the regulators? Because I heard Martin say he found some of the regulators very open-minded to the extent that if it wasn't for them, perhaps the miracle in part that we see in Kenya wouldn't have been possible.
And I totally agree, saying like we learn along the way with the regulator, hand to hand.
Right.
For instance, I can take the example of Senegal, where we have a market where the regulator was very open. There was no little regulation around the agency banking. And it was allowed for us to pilot and to start showing proof of concept, which was happened. And for instance, let's take the example of Madagascar, where it happened, but 3 years later, because at the beginning it was very much more difficult to get at least an approval to be able to start.
Were you being judged like you're a traditional finance institution?
Yes, exactly. So
That was part of the problem.
that was part of it.
We're going to come back and talk about that. Let's get more experiences. Can I come to you, Keith? Because you are active in Zambia, you are active in Malawi. What was your experience? What kind of welcome or what kind of, was it hostility, did you find?
So Zona has been around for approximately 10 years. We provide digital financial services across products, and we also have built a distribution network as well. So Godfrey, to your question, the regulator in Zambia and Malawi, where we operate as well, has been incredibly facilitating. We would never have been able to start in the first place had there not been so. We arrived 10 years ago, a few people with an idea, then presented it to the Bank of Zambia. They were very welcoming to the idea. They understood the problem of financial inclusion. They understood that they weren't going to be able to solve it themselves, and were very open to the idea. So literally, they gave us a letter of no objection and said, go for it. Just keep reporting back to us on your findings and your learnings. And we certainly have seen them as partners on this journey over the past 10 years. They've been incredibly supporting. So our experience in the markets that we're operating in have been very positive with the regulators. We've also tried expanding into other markets and found some experiences to be less positive in some of the other markets we've been in. But certainly we've found in Zambia and Malawi that they've been very strong partners and facilitators and supporters of the expansion of this industry. So they need to be congratulated as well for their role in this.
Are you comfortable to share with us those places where you had interesting experiences and challenges and hard lessons?
So yeah, I mean, it's well documented that a market such as Mozambique, for example, is still trying to understand how exactly they want to regulate the industry. We fit into a slightly strange niche in that we're not coming from the traditional directions that mobile money exists in, which is normally via the MNO route, the mobile network operators, or from the traditional banking / MFI route. So a company like us arriving that don't really fit into either of those boxes, there's a fair amount of uncertainty as to exactly who should regulate us and how should they regulate us. So there's been sort of a lack of clarity. So I wouldn't go so far as to say there's been animosity, because that's not true at all. There hasn't been. It's just been a lack of clarity as to exactly which box we fit into and how they should regulate us.
Yeah, I think I raised the issue, and it's important because I think we all know that African bankers are notoriously conservative. And in particular, central bankers, when you look at what we're doing with our foreign exchange reserves, for instance, when the continent is wallowing in poverty, but that's a discussion for another day. George, you operate in a very interesting market where you have been forced to innovate in order to be able to make something happen. Your lessons from trying to expand financial inclusion in Zimbabwe.
Thank you, Godfrey. Zimbabwe is an interesting study case when we talk about financial inclusion. Some of the lessons, but probably the history is coming out of hyperinflation, where the country went through a very difficult patch, and resultantly we had to dollarize, which meant that we were running a currency that we couldn't print, that we couldn't control. And they always say bad money chases good money away. So resultantly, we ended up with a situation of a liquidity crisis where there was not dollars in the market. The only solution was going electronic. And that's when we came up with the solution for our country, which is our mobile money platform that we built, which we call EcoCash. The lessons learned on that is because we were the pioneer in the market, we had to play big brother in terms of education. We had to play big brother in terms of mobile literacy. We had to play big brother in terms of building an infrastructure, the agent network. We had to innovate all those things. And fortunately, because of the crisis, the regulator was very welcoming to the innovations and to the ideas and to the rolling out of the mobile financial services platform that we're building. So we've had to learn things the hard way and also innovate around some of the challenges that we're facing. For example, we ended up with a lot of our customers having to travel extensively to survive in terms of trading. We have a lot of Zimbabweans that come into Dar es Salaam to buy goods and to buy goods for trading. Because of the port, a lot of the goods come through Tanzania. So you have a customer who is coming to Tanzania who needs to trade and who ordinarily does not have a bank account. So the innovation that we put in is that your mobile wallet, we linked it to a MasterCard. Thank you, Anne. We linked the mobile wallet to a MasterCard.
I want to clarify, that's MasterCard, not the MasterCard Foundation.
Not the foundation, yes.
Just to be clear.
So we linked your mobile wallet to your MasterCard so that when you travel outside the country, whatever is sitting on your mobile wallet is available to you on the card. So you can either come into Dar, you can swipe it in ATM, or you can purchase using that mobile, that card. And that is linked directly to your mobile wallet. So those are some of the innovations that we've had to do because of the challenges that we had. We also had some challenges, obviously, going through the crisis. You would find that remittances become a big part of the ecosystem and the economy. So we have an estimated 5 million Zimbabweans outside the country. They want to remit money back into
Are those
Zimbabwe.
your figures? Because the issue around the number of Zimbabweans that are outside the country is
the numbers
huge.
are always debatable. Obviously, South Africa has the highest numbers, and then followed by the UK, and then the rest of the world. But when we look at, we're looking at plus or minus 5 million Zimbabweans outside the country. They remit money regularly, religiously, because they have to support the family they've left at home. We've had to innovate around that and actually link your remittance to the mobile wallet of the receiver. So as we speak, whether you're sitting in the high street in London, or you sit in New York, or you're sitting in South Africa, you can remit directly into the mobile wallet of your relatives at home. So those are some of the things we've had to play with because of the challenges that we have.
And if I can come to you, so I want still to come back to this idea of innovation and regulation, because innovation by its very nature is rebelling, if you like, against the rules, whereas you do still need regulation, because regulation is a set of rules that you need to observe in order to make the system work and continue to work. In your next phase, do you have any plans to try to work around this little contradiction, if you like, in terms, and what kind of areas do you see potentially the foundation looking at in order to help African regulators move along the path of innovation without obviously disrupting the system too much to the extent that it doesn't work?
I think the best thing we can do is actually produce evidence as well as research and take them to whether it's central bankers or ministries of finance, ministries of communication, et cetera, and show them what works. Now, in terms of the area of innovation, I think that's where we need to think about how do we engage with regulators in terms of showing opportunities for innovation. So it might be pilot projects that we can take forward where there may be some appetite for some risk, but we're not sort of betting the whole project on it. So I think it's important, first of all, to have a good dialogue. This is something, quite frankly, the foundation has not engaged in up to this point. We've been very careful around that. But I think going forward in terms of our new strategy, if you want to see some of the innovation and changes that will catalyze some of the innovation that we expect will solve some of the challenges around, for us now, youth employment, you need to engage at that level. You need to engage at a market system level.
Yeah. And African governments will have to start thinking out of the box in terms of how they look at expanding those economies and also, implementing some of the measures to try to get as many people in.
Exactly, and I think, I think in our experience so far, there are some countries where there's more of that so-called regulatory sandbox, maybe than others. And I think, in fact, there's been some recent good news, I think in Rwanda, around interoperability that has been in the works for some time around retail payments.
Right.
So I think, where we can bring forward both existing partnerships that we've worked with around the innovation space, but also identify new ones.
Yeah.
And take them forward and open that discussion and exposure and share knowledge and evidence.
Yeah.
That's the role we should be playing.
Absolutely. Martin, do you want to come into that?
And I just want to make sure no one walks out here with the impression that it's always easy to get the regulatory framework right. It's not.
Yeah.
It's hard work, and Tanzania is actually a great example. They got it right, but it took, there was no but, and it took a lot of discussion, dialogue, learning from others, exposing best practice experience. Ghana is a great example where it took years, and now the Ghanaians, I think, have it together for a good environment.
And it's important, I think, to mention these countries because they are lessons for the other 54 African countries, certainly, that are not on this path.
Totally. And I think as this new digital economy is propping up around the world, it's so important to look what's going well where and then to try to copy it. Several people have already said what we need is, first of course, the internet, universal connectivity at affordable rates. Second one is technical standards that support interoperability. That's one thing that Tanzania got right early on. A regulatory framework for the use of agents. Anyone who walks on the street here will see all the wakalas. Those are agents.
But there lies a challenge, isn't it? And I think Mariam can speak to that, in terms of how the regulators approach agents, because they want to put them in that box that they have used over the years, that they were taught at university. I'm sorry to say, but were taught perhaps regulated by international financial institutions such as yourselves and the World Bank.
Possibly, because in the old age, everything was about financial system stability. So, for instance, in the case of Madagascar, where Baobab has operations, they used to need to get a license for every new agent that they opened, which was, of course, the way to license banks in the past. But the regulator has learned, the landscape has changed completely. Here in Tanzania now, every person in Tanzania is within about 5 kilometers from an agent, which is a revolution compared to 30 years ago when there were maybe 200,000 customers per bank branch, often 50 kilometers away.
And maybe to jump on that, for instance, in Baobab, we have like about 1,000 agents. Majority of our distribution now is made of agents.
Right.
And the regulator let it go. For us, it was evidence for them to see how it moves forward, and everybody now around is interested to get into that. It's really, third of our agents are more than 3 kilometers away from traditional branch. If you imagine a life of someone who used to walk or travel up to a branch, it changed their life. It's easier, simple, faster. So really, they see the benefit of those innovation. Of course, they may be afraid because they are thinking about customer protection, but then it brings more pressure even on the MFIs who go into that field to innovate around how to still get the clients very secure in those environments. So for instance, we have put in place a whole organization around agent management. It's a different type of work. You need to make sure you train your agent, you give them what it's required for them to provide quality services. So everything is around innovating around this new environment. It's not only about being the traditional way, it's more about innovating around this.
Let's talk some stories here, George and Keith, if we can, from the examples of the type of work that you guys have been doing out in the field. Can I begin with you, Keith, and then we come to George?
Sure. Specifically around agent networks and...
Yes, and also even some of the other work that you've been doing in terms of trying to get people to be part of the financial system.
Yeah, so it's been a very interesting journey for us over the last 10 years where the industry in its nascent form, there was a lot of gaps. As a provider in the industry, you needed to fill a lot of gaps that maybe you wouldn't ordinarily want to, but they weren't there. So, when we first started, the intent was not to build a distribution network. That was never the plan. And I always make the joke that I used to have hair, and then we built an agent network. So this stuff's hard, it's complex, and it's dynamic, and we're learning all the time. But it was sort of moving along this journey that we had to recognize where the holes were, and we needed to fill it through just a requirement in order to deliver the end services to the customer. So over the years, it just evolved and developed to what it is today, which is a complicated beast of product and agent product and liquidity, and it becomes a very complicated business. But as the market's evolving and more competitors are coming in, it's very interesting to see how it is starting to evolve, because some niche opportunities are starting to open up, where new entrants are able to lay digital products on top of existing agent networks and aspects like that. So what we're seeing is the pace of innovation and the pace of movement is actually increasing as a consequence of a lot of the rails having been laid. So we're really seeing the markets changing and shifting dramatically. And as an example, when we first started, our product was a very simple domestic remittance product, which was done over the counter. So essentially a customer would go and transact with the agent, and essentially the agent would do the transaction on behalf of the customer. And that was very much a reflection of where the customer was at the time. The market has shifted dramatically now. It's now moved into a digital world. Customers are used to transacting on their phone. They're comfortable with doing that. So we're now moving into this digital world and offering digital products where a customer now, instead of cashing in and the agent doing the transaction on behalf of the customer, they're now cashing into their own wallet, and they're now able to transact in their own environment however they choose to see fit. And this is happening rapidly. It's literally happening as we speak.
And we're going to come back and talk about education and the role that it plays, as well as mobile literacy, as some people are calling it. But you met some incredible people along your journey and discovered the power of women in Africa.
Absolutely. Yeah, it's been an emergent factor of our model that within our agent network specifically, that women have shown to be very good agents.
You can say it. Women are better agents than men agents, right? Did you find that?
Certainly in our experiments that has been true. So it's been. I wish I could say we designed it this way. We haven't. It's emerged, and it's a fantastic sort of outcome of the agent network that we've built. That there's a lot of women empowerment, and I think as
by accident almost.
Yeah, I mean, I think it's even more powerful that it's emerged because it's more true, because it genuinely has emerged through just good hard work and effort of a lot of the women agents. But as Anne has alluded to, jobs and access to opportunity, especially amongst the youth, is a huge problem and therefore opportunity as well.
Yeah.
So it's fantastic for us to be able to have an agent network that provides this opportunity to
Yeah.
young people who may have the skills, because in order to be an agent, you don't need to have a university degree. You need to be able to read, and you need to be able to write, and you need to have the right attitude. Those are the sort of factors.
These are
that you need.
ordinary people.
Yeah, and to be able to create this opportunity whereby ordinary people, specifically women,
Yeah.
who are largely excluded from the economies, not because of skills, but because of opportunity,
Sure.
are now able to be included, and
Yeah.
they're able to contribute to their families. They're able to contribute to the tax base,
Yeah.
and that's an emergent sort of byproduct of the ecosystem
Yeah.
that I think is often not spoken about as much as it should, in terms of the power of it within these.
Yeah,
within these
and I think I can
economies.
also say that it's a power that even the regulators would have had no idea was residing amongst the people.
Absolutely.
George, you have had to do some pretty interesting things in order to be able to get your product out into the market. Please share some stories with us.
Godfrey, the Econet story, I'll need a whole day to talk about it. But I'll try and quickly
I have very few minutes.
paint
yeah.
a scenario.
Yeah.
Let me paint a scenario where I have two grandmothers. We call them in our vernacular gogo. So I have two gogos. One is living in the southern part of the country, which is near the border with South Africa. And then I have another gogo living in another part of the country. The gogo near the southern part of the country trades in rand. They don't trade in dollars. So they trade in rand. So we've created a rand wallet for them on their mobile wallet. So we've got two currencies that we've put on the mobile wallet, a rand wallet and a dollar wallet. So Gogo in South Africa gets money from South Africa. So before this digital journey started, you would get a postal order. Then the postal order would arrive at a school near your homestead. Then the teacher would tell the child in the school that tell Gogo to come and see me. Then Gogo would come and pick up the postal order from the teacher, because the postal box would come to a school.
Yeah.
Gogo would then have to plan for 2 days to jump on the bus to go to the nearest town
Sure.
to go and pick up the money from the postal order. And Gogo would get to the town and wait for 2, 3, 4, 5 hours in a queue to get the money. So by the time the journey is finished, the
Yeah.
whole day gone.
Yeah.
So that was Gogo's journey.
If she doesn't sleep at the post office.
If she doesn't have the unfortunate incident that she then has to look for a relative in the town to sleep overnight to pick up the money because
Yeah.
the queue was there
Yeah.
or the money ran out.
Yeah.
So that's the story.
Sure.
Now, we have cut that journey to literally 5 seconds.
Huh?
That's what we've done.
5 seconds.
5 seconds. You are sitting in South Africa on your mobile wallet. You can send money to Gogo direct into a wallet in 5 seconds. Then the money is there, you get your message, she gets a message, she's got her money, and she decides what she wants to do with her money.
Revolution.
We've even gone further now, because sometimes Gogo has a problem that when she gets her money, because she's not so au fait with the phone,
Yeah.
she gives it to cousin Jack, let's call him cousin Jack. Cousin
Yeah.
Jack goes and withdraws the money from an agent, and instead of bringing Gogo the money and buying the groceries, he decides to buy some beer. And tells the story to Gogo, and the money is gone.
Yeah.
So what we've done is, you are a banker now working in High Street in London. We've given you what we call a home wallet. So you've got a wallet on your Vodafone line in the UK,
Yeah.
which you can transact as if you're sitting at home. So you decide to say to Gogo, I'll send you the money, or you send it.
Yeah.
Or you decide to say, no, Gogo, I'm going to pay directly the fees for my little cousin that you're living with into the school account.
Yeah.
So that sitting in London, you can pay school fees for your relatives sitting at home directly into the school's bill account. So that's how we've transformed it, because of the challenges that we picked up between the community. But we've gone further and said, Gogo had problems. When there's a funeral in the village, she had to dial the relatives and ask for money.
Yeah.
So we've added on a funeral product onto our mobile wallet, which Gogo can elect to, in the African culture, we called it Twala Sonke. Twala is a Ndebele word for saying carry everybody.
Right.
So on that product, Gogo can now insure herself and the relatives that she's looking after,
Yeah.
and we deduct money on her wallet every month. All she has to do is press 1 and say, yes, you can auto-deduct on my wallet.
Sure.
So every month we deduct the premiums from her wallet. She doesn't need to do anything. The money comes in, and that happens. We sat with the regulators because we have 3 regulators and different ministries. So we have the central bank, we have the insurance regulator, we also have the agriculture. So we've actually sat with the regulators and said, there's no point for me to ask Gogo to register with the mobile operator. There's no point for her to then go and fill out new forms for registering for the for mobile money, and then for registering for the agricultural platform, and for registering.
Yeah.
So you do 5 forms. So
Yeah.
we've sat with the regulators and say, can we use the data that we're collecting from one regulator and pass it on to all the regulators?
Yeah.
And all Gogo has to do is, at inception, when she fills out the form to buy a line, she must tick the boxes to say, I'm going to buy a line, and yes, I want mobile money, and yes, I want insurance, and yes, I want farming. So you tick the boxes at inception to allow us to share that data across the business, but it's all in one group.
About data, like this case study is exactly what MFI are working for. For
Yeah.
instance, let's take the example of Baobab. We've been leveraging data. We know more about the client, so we can now propose them some quick, fast loan, which it's a gain of time for them, for us. So really, we can disburse loan in 5 minutes through their wallet or on their mobile.
Sure.
And they will have it. It's all based on data.
Yeah.
We know our clients, so we know how they repay.
Yeah.
And we use those data to be able to automatically disperse loans on a short term
Yeah.
for short-term liquidity needs. So really, it's key.
Absolutely. There are lessons for the regulators as well, because I think the regulators are also finding data that ordinarily they would not have had, so they may be glad to be sharing this data, though not all of it. And when you hear all of this, I guess you must start thinking, surely we can move from 43% financial inclusion to 100% financial inclusion in Africa. Can we?
I'm quiet because I'm just thinking. No, I think it's possible. Is it going to be 100%? Maybe not. It might be shy of 100%. But I think in terms of where we're moving on the digital front, I think it's possible. I think the last mile challenge remains. So I think over the next, the goal is to have universal financial access by 2020. So that's only 3 years from now. Right?
Sure.
Not actually, it's 2 years.
You need a miracle.
Right. So I think there is a bit of a miracle there that will need to be had. So I'd like to think that we'll get there. I do think the pace of innovation that we're seeing, and we haven't even begun to talk, and I know that the agenda in this learning event over the course of this day and tomorrow we'll talk about some of the emergence of what we're calling platforms and super platforms. We have some representatives from those organizations here. It will change, I think, the nature of how people transact.
Yeah, but
in
why
the
are you hesitant,
economy.
Anne? Because you raised one of the more powerful points here when you spoke earlier about the power of the smartphone.
Yeah.
And how we have not
I
been
know.
able to actually comprehend what this thing could potentially do. And when you hear the stories that George is talking about, the stories that Keith and Marema are talking about, surely I can't see a barrier.
I think Martin touched upon this, and I know those who are in the field practicing this day to day can speak more to the reality.
Okay.
So I might defer to them, but just, I think Martin's point around basic infrastructure.
Yeah.
So people having access to internet at higher speeds, power, affordability, all of that is critical.
Guys, it's happening. Martin, where's the doubt?
It's not so much of a doubt. It is happening. So is it possible to get to 100%? Yes. But we should remember, even in extremely highly industrialized economies, there's not 100% access to finance. Even the United States doesn't have it.
Sometimes by choice, isn't it? Because I'm imagining if you are able to give everybody a smartphone, surely.
Yeah, the smartphone is a bank in the pocket, so to speak, or it's a bank branch right in your palm, right?
100%, yes.
Very true, and in fact, there's many organizations in this very country here in Tanzania I was just visiting clients who are showing me their platform, which is essentially a bank in the pocket. So we're moving there, absolutely. At the same time, we still find pockets of what I would call structural exclusion. Women tend to be more excluded than men. Those are sometimes social issues that need time to change.
Yeah.
At the same time, in the more rural and more agricultural we go, the less access we have to finance, and those are still some barriers. And I think there's also still an affordability barrier. What we're discovering is that many, even of the new digital offers, tend to be fairly expensive. So one thing that we are concerned about, and we want to create markets as the World Bank Group, is to avoid monopoly powers that tend to keep the prices up.
Okay, so maybe I'm talking to the wrong people. Let's talk to the practitioners. Let's talk to the practitioners. Keith, come on. George, you guys, you tell me. Mariam, is it possible to get to everybody?
Absolutely, the answer has to be yes. When is I guess the question, and how is another important question. There are some structural barriers that are still in place. We've covered a couple of them. Access to, it doesn't even have to be a smartphone. Even a feature phone in a lot of instances is sufficient. But how do you power that device? Not only for the consumer themselves, but for the agent too. So power is an issue. These problems are getting solved, with solar devices, etc. So it's not like these are insurmountable problems, and it's not like we don't know how to solve them. It's just a matter of, how quickly and how effectively can we roll these out. So that's an issue. I think distribution is still very much an unsolved problem at that sort of deep level of rural finance. We've largely, I think, whilst we're celebrating the successes of mobile money, I think as a general statement, it's largely covered the sort of middle income of Africa, and we still haven't reached those far out places. So as an anecdote, we're part of a program providing social cash transfers for sustainable women's livelihoods in Zambia, and we're having to distribute cash in some incredibly rural places. An example is a place called Chulubi Island, which I encourage you to all look up on Google Maps where that is. It is 7 hours, Chulubi Island.
Chulubi Island,
It's 7 hours from the nearest place, and you're having to paddle across a lake with a canoe. We're having to distribute cash in those locations for women who need this money. So getting it there.
Can't we put a mobile tower there?
Well, so we've got pictures of people standing on top of a rock trying to get one little bar of signal. So these are genuine challenges, and this particular project is the challenges have been high and expensive for us to solve, and it's been a complete loss maker for us. But this stuff is really important and it matters, and this is where the likes of the MasterCard Foundation, the partnership with the IFC and various others that are helping to fill this gap where the private sector is unable to sort of clearly take advantage of these opportunities because it's unclear how to solve these problems, and providing capital and technical assistance to get to that last mile.
Absolutely.
We're still a long way from there.
I want us to come back and talk about education, but I've just done a simple equation here, and I've said cost times education is equal to technology. Technology will solve everything. George, no?
Just to add on to what Keith is talking about, we're sitting at 83% in terms of adult.
83%.
83% in Zimbabwe adult penetration on mobile money or low-value bank products. If you take out 5% of your population, which is normally above 75, that you would probably say will not really push to get a mobile wallet because they're in a household which already has a mobile wallet. They're not interested.
They have no need.
So you're left with about 10, 12, 13%. When I look at our mobile network operator, at the moment, we have covered 90% of the population in terms of connection in the country, which the 10% is very difficult because the cost of putting a tower or base station in some of those areas is prohibitive. Although I know government is now working on a plan of making sure we have 100% coverage, which will be a government-funded project.
Right.
So once we have 100% coverage in terms of network, then we can achieve 100% penetration. But there are challenges, obviously, with infrastructure.
Absolutely. We have to be mindful that this is a government that has no money anyway, so perhaps that may not be happening anytime soon.
But I'm
Mariam?
very optimistic that we can achieve that. The question is when.
Yeah.
For me, it's just
Is cost an issue?
Cost is definitely an issue.
How big an issue?
it's the business case around those, because we started from a big brick and mortar solution that can be not scalable if you want to address the mass market. Now we're going through the agent. And again, the agent, it's a cost. You need to pay them. You need to make sure like the whole ecosystem is working. It's a win-win game for every stakeholder. So it's still something that we are looking forward to find a solution by being innovative. But I'm pretty sure we will get there, because from 5 years ago, we're not even here.
Yeah.
Now we are having like 1,000 agents, much more adoption.
Yeah.
And again, like, yes, it should be in favor of the client to have more people thinking about a way to provide them really simple and accessible.
Absolutely. I mean, the MasterCard Foundation, when they set out, they said they wanted to reach 5.4 million, how many? 5.2 million people?
And now we are.
And what did we get? More than double the number that we were originally looking for, 11.4 million. So, but George, you told me one of your products costs 50 cents.
Correct.
The insurance.
For insurance,
Our basic plan for funeral is 50 cents per month for a benefit payout of $500. So we've tried to make it as affordable as possible, because we are looking more at the need. One of our mottos is we must do good in order to do well.
Sure.
So that's part of us doing good. Obviously in insurance, you know that there's subsidization. So because of the subsidization concept, and also because of cross-subsidization, and also because it's a mass market product, the numbers pan out.
Sure. So cost can be overcome. I think that's the point.
Cost can be overcome as long as they scale.
In terms of, it's not only about getting loans, it's also about some people need basic needs, which is solar energy, for instance. So this is part of getting them on board. The pay-as-you-go technology is helping people to get access to solar energy with really small amount per month, or given the money they have. So really it's a good start for them to get on board of this digital and financial inclusion.
Education is a big part of this. Who needs to do what? Who needs to be carrying out this education? There's two levels, I think, as we discussed at the beginning. Number one, of the consumer, but secondly, also offer the use of the technology itself. I don't know from a MasterCard Foundation if that's something that you guys are addressing?
We do it through the partners, and in some of the programs it's embedded. But I have to say, in terms of financial education, it's always best done when it's embedded somehow in the products that are being used, rather than sending people traditionally to workshops or classrooms to be trained on, whether it's, basically how do you manage your assets, your liabilities, et cetera. It's much better to do this in time as you're using products. So I think we've seen some interesting new models and technologies around how to support that kind of education. But we definitely believe that digital literacy and what needs to be done on that front, there's quite a road to go, I think, on that. And that's something we'll be focusing on in terms of part of our new strategy. That'll be an area that gets a lot of attention.
Yeah. You want to add, Martin?
It's one of the reasons that the need for education, why I personally strongly believe in hybrid models, a little bit like what Baobab are doing, and also the partnerships that Zuna, for instance, are engaged in. By the way, both of us are investees of ours. We're invested in both organizations. And for certain things, in terms of your educational needs, the human touch is still super important. Most people that I know, by the time they go for a mortgage, they want to see a real banker in a branch. And so the hybrid models that we're now seeing here in Africa are very interesting, because we still have the availability of the human touch with branch networks, and at the same time we can use the new platforms to go to scale at much lower cost. And we should not forget that the new natives, the digitally native people in Africa is the youngest continent of all, so we find lots of digitally native people get their education from YouTube and whatnot. So I think in general we're going to see much more familiarity at the client level with getting information at the point of need.
Do you guys want to add to education?
Yeah, I was just going to add on education. I think it depends on the segment that you're dealing with. So if I'm dealing with the lower segment, we found that the best way to educate is via groups, where we use women groups to do education of digital literacy. We've also used school children plays. They do skits, and in the skit, they explain the transactions and how you're not supposed to do this, or how you're not supposed to give someone your PIN, and how you're not supposed to do this.
Sure.
So we've used different type of models. And as you go up the segments, obviously there's lots of platforms now. We've opened up chatbots for education. Social media, is good on education.
Explain how that works quickly.
A chatbot, like for the digital bank, we've got a chatbot called Batsi. Batsi is a short name for Batsirai, which means help. So you call Batsi and you start asking Batsi questions. I'm on my phone, I want to do ABC, what do I do? Batsi takes you through the motions of how to use your phone.
On the phone itself.
On the phone itself. So chatbot works, but not for every segment.
Sure.
So it depends with the segment that you're dealing with.
Absolutely.
You have to apply different methods.
Keith, unless you want to add anything, I do want to get your closing thoughts.
Sure. So I think as we sort of look back at the successes of the past and then look to the future as to where this might go, there's very few people in this room who would probably be able to give any certainty as to exactly what this is going to look like, even 5 years out. So this is changing rapidly. So it's difficult to sort of know exactly where to position your company and where to go as this is evolving. So I think we all need to be sort of flexible and understanding that this is a changing landscape, and certain parties are going to fit into certain places in different ways. And some of the entities that exist today will no longer exist in 5 years, and there will be entities that we haven't even heard of, and solutions we haven't even heard of that are coming in. But whilst we're thinking about this next wave of innovation, I'd just like to encourage everybody to not only think about the exciting new when there are still a lot of first order problems that have still not been solved. We've just touched on training and education. So there's obviously two aspects to that. How do you use this particular product, which is difficult but arguably the easier one, but why should you save? Why does it matter? Why should you take an insurance product? And if you do, what kind of insurance product should you have? Those are more abstract problems and more difficult ones to solve. Down to the agent level, how do you ensure that there's enough liquidity at the agent at the time when the customer needs it?
Sure.
KYC is a massive problem and will exist for a long time as to how does a customer produce a KYC, especially in a refugee type environment where this is a massive problem. So I think I just want to encourage everybody, yes, let's get excited about digital product and the new age and how we can use data to bring more to customers and the new entrants that are coming into the ecosystem. I think that's great, and it's great and beautiful to think in this blue ocean. But at the same time, there are genuinely some deep first order problems that still have not been solved. And I want everybody to keep applying the brain power and the capital and the capacity, still trying to solve some of these problems that are unsolved.
Absolutely.
So that's my parting thought.
Martin?
So, in my view, Africa really has a lot to be proud of. It's leapfrogged pretty much the rest of the world in terms of digital access to finance, and the rest of the world is, in fact, there are many people here from the rest of the world learning from the African experience. In fact, I was recently with some African colleagues in China of all places, which is digitally very advanced, and we were talking about the experiences here, and there was a lot of interest and a lot of questions. We need to fight structural exclusion. I'm still worried about, while the vast majority of people, I think, will have access to finance on this continent, that we're leaving out certain pockets, and we need to worry about those and think about those. We need to improve standards for consumer protection. There's a lot of light in the digital finance space, but also some shadow, and avoid market concentration. I want to move from access to inclusion. Access is just I have an account. Inclusion means I use it. I use different types of financial services, and I'm a repeat customer. And then finally, I think a challenge that we all have is to link finance even more with the real economy. As we're building out digital economies all over Africa, I think that's really our biggest challenge, is how to link that with provision of other services, whether it's power, health, education, and I think that's something that then leads very much into the jobs agenda, which for this continent is more important than for any other continent around. So those are some of the challenges that I think, but it's an exciting time to be around and to be in this field, and I'm very proud that we're working and cooperating with so many partners on it.
Absolutely. And
What we've seen, you know, I've been working on this for, together with my colleagues at the foundation over the last couple of years, and I think what we've seen both in this partnership with IFC, but also with other partners, is this opportunity for constant adaptation and innovation and some flexibility. But very quick, so I would like us to continue to pursue that with a range of partners, and maybe invert the challenge, which is less about, yes, we want to achieve financial inclusion for all, but in order to do what? So it's really about how do we use financial inclusion as a tool to help us solve some of the you know, most persistent, challenging problems you know, across the continent, whether it's improving productivity in agriculture, access to education, et cetera. I'm sort of energized by what I'm seeing on the energy front and the opportunities I think that we could leverage here around alternative energy, et cetera. And I think really looking at how we can deploy that to solve some of the infrastructure problems will help continue to accelerate some of the progress we're looking for.
Sure.
Thank you.
For me, my parting shots, when all is said and done, technology is exciting, disruption is coming whether you like it or not. If you don't disrupt yourself, someone will come and disrupt you. But ultimately, are we transforming lives? And are we measuring the transformation? Are we measuring the impact? Are we changing lives? We can get excited, but if we're not changing lives, it's just, you know, the tech is getting happy.
Sure.
But we have to have impact and transform lives. Because once we transform lives, we transform nations and we transform economies. Thank you, Godfrey.
And I will finish with unleash the potential of the clients, because actually anything we are doing is around the client, so we shouldn't just forget about why we are doing it, for whom, and to be listening to whatever, because those people are changing. They are becoming more and more demanding. They are becoming more and more connected. So every actor here has to get on the train and understand better the need to give them like dedicated and simple access to financial services, whether they are financial loans, but also it can be access to energy, access to their daily life, make it easier through digital.
Ladies and gentlemen, please help me to thank my panelists. From all of us here, thank you very much indeed for watching.